Hello, fellow Rebel Capitals. Hope you're well. So the new CPI data is out, and it shocked the market. It is red hot. Does this mean that we're seeing a reacceleration of consumer prices, especially when you consider the Trump tariffs? We're going to get into that in just a moment. And we've hit the next phase of the collapse in the Chinese real estate market and therefore their economy. And we've got some good news. DOGE is uncovering some crooked government officials and politicians. And bonus, Trump is meeting with Putin, and we could see resolution to the war in Ukraine. That is definitely a good thing. So let's start by getting into the CPI data from this morning. We're going to go over to the Wall Street Journal. Title here, Inflation Heated Up in January, Freezing the Fed. Clever Wall Street Journal. I see what you did there. Their key talking point, consumer prices rose 3%. So punchline here is the CPI went up to 3%. That's year over year. Month over month was what was really surprising to me and something that really made me think. And that's it went from 0.3 to 0.5. More on that in just a moment. So let's look at this chart. Josh, you want to zoom in on this bad boy? And we're looking at core and overall. The reason we look at core is because the Fed supposedly pays a little more attention there. And whether we think the Fed moves markets or interest rates or whatever, it doesn't matter at the end of the day when we're setting a portfolio because the market pays a lot of attention to the Federal Reserve and Jerome Powell. So you can see with this gray line, we kind of bottomed out at 2.4. And since this time, we've gone up to 3%. And core, pretty much flat. So a lot of people would say, there you go, George. The Fed started dropping rates, and they shouldn't have, because look what happened. Obviously, they had rates, or they probably didn't have rates high enough when they were at 5.25%. And since they dropped by 100 basis points, now we're at 4.25. This has created this reacceleration of consumer prices because now interest rates are way too low. They're too accommodative. And therefore, we're getting this shocking report caught the market way offsides, especially when you look at the month over month, but we're increasing the probabilities that inflation is back. And it's not just that prices are rising. That was a given, but prices are going to rise at a faster and faster rate, taking us right back to the 1970s. And it all goes back to the Fed and their stupidity that they started dropping rates to begin with when rates were already too low. This is the argument, right? But now, I'm not going to say that argument is wrong or right. I'll let you be the judge. But one thing I want to point out, that the number one interest rate for the economy and therefore inflation in the economy is what? Is it the Fed funds rate overnight? No, you guys know this. It's the 10-year Treasury yield. It's not the only interest rate that matters, but it's definitely the most important when we're looking at consumer prices. So let's think about this. The argument is the Fed dropped rates too soon, and therefore this is what is contributing to the reacceleration of the CPI, using that as a proxy for overall prices. But what did the 10-year Treasury do? And hopefully I've got that chart up here. Oh, I know I had it. Okay, so I know where it is. Let's just go to CNBC. I think you guys pretty much tell the punchline. But interest rates on the 10-year Treasury yield, as the Fed has been dropping rates, let's go last 6 months, have been going straight up. And in fact, they've gone up by 100 basis points, almost 100 basis points. So what we've had is we've actually had monetary tightening, or you could argue this. We've had a lot of monetary tightening based on the long end of the curve since the Fed started dropping. So obviously my point is you can't just say, well, the Fed dropped too soon and that's what's causing this reacceleration in the CPI, because the interest rate you should really be looking at didn't go down. It went up by a full percent. Okay, getting back to the Wall Street Journal. And again, I'm not saying right, wrong. I'm just giving you food for thought. Consumer prices rose briskly in January, extending a recent pattern of price increases at the start of the year that likely derails the prospect of the Federal Reserve cutting rates anytime soon. The Labor Department said Wednesday prices rose month over month by 0.5%. And that's a big deal. That even caught me off guard for sure. That was the largest monthly increase since August 2023 and well ahead of economists' expectations for milder increase of 0.3. The gain pushed 12-month inflation to 3%, like we said earlier. And let's see, that marked a pickup from December when prices rose at 2.9. Markets reacted swiftly. The 10-year Treasury yield at one time was up, I think, 11, 12 basis points, dropped down to maybe 8 or 9 or so on the day. This is according to Paul Ashworth. He says inflation has now been around these rates for some time and clearly isn't coming down decisively anymore. Correct. Another thing I want to point out, and this chart I do have up, I think you guys will find this interesting. If we zoom in and look at the last rate cutting cycle, and I want to oh, no, let's go up here. Moving all around. Sorry, guys. I want to start right here with this red line. And hopefully you guys can see that. The point I have marked, the inflation rate is 3.5%. You say, George, who cares? So what? Well, I'd like you to pay special attention to the date there. That's September 2007. That was the last time, with the exception of the cerveza sickness, when the Fed started their rate cutting cycle. And oddly enough, it was September 18th. Oddly enough, it was from 5.25%. And oddly enough, within that first year, or 2007, they dropped by 100 basis points. Exact same. Now, what differs is what they did in January. Back then, they dropped by another 125 basis points, where obviously this January, they paused. But let's get hyper-focused on the CPI. You'll notice 3.5%, but look at what it did. Going all the way to June, July, so summer of 2008, where it went from 3.5 up to 5.6, an increase of more than 2%. And by the way, this is when the Fed was cutting interest rates a lot. And then you say, okay, George, what was happening to the 10-year Treasury? I'm glad you asked. Well, the 10-year Treasury initially went down, but then from March to, call it June or July, the 10-year Treasury yield went up by, drum roll please, 100 basis points. Very similar to what we have just seen. Now, I'm not saying this means 2025 is 2008. But what I'm saying is that that you can't say that 2025 isn't 2008 just because we see the CPI going up, because it did the exact same thing during the last cycle. See? So again, I want to be very clear. I am not saying that because things are lining up here to a certain degree, that means that 2025 is going to play out exactly like 2008. Nope, George is not saying that. George is saying that just because we see CPI going up, you can't take 2008 off the table. That's really the bottom line. And I know a lot of the pushback I'll get is, well, George, you cannot compare these two because of all the money printing. I mean, think about it. In 2020, 2021, 2022, what do we have? We had Jerome Powell sitting there with money printer go burr. Brr, you guys all see the GIF, the meme. And we had all of this money printing, and therefore we have so much money printing that this cycle is going to look nothing like, it can't look anything like 2008, because there's so many currency units out there chasing goods and services that, yes, we might get a recession, but this is by no means going to lead to disinflation. It's going to be an inflationary recession like the 1970s, if not something a lot worse. This could be the precursor to hyperinflation, for heaven's sakes. It definitely is if you listen to a lot of the people in the Bitcoin space and the gold space. But let's just pump the brakes on that one a little bit. And I get this is a good argument, fantastic argument. But what you have to do after listening to the good argument is you have to say, I wonder what M2 did leading up to the GFC versus what M2 did leading up to today from 2020. Because we all know money printer went burr and the M2 money supply went up a lot. But by how much? This is important information we need to determine the probabilities of what plays out in 2025 and what plays out with inflation. So let's look at this chart. This is M2, this is CPI, but instead of just being kind of the nominal increase, we've got it compounded. So what I want to do, where are we starting here? We are starting, actually, let's start with the more recent data. So we're going to go back to 2020. So we're right around March 2022, January 2025. This is when, Jerome Powell was there, money printer, blah, 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 blah. The currency units flying out, the dollars and everything. And during this time, did M2 go up? Absolutely it did. Went up huge. Compounded, it's up almost 40%. So 38% since the cerveza sickness. That's a big number. So does this mean that we have to completely take 2008 off the table as a comparison in terms of what might happen with the CPI? Well, obviously what we have to do is go back and look at that exact same time frame prior to the GFC. So let's go back, and we're going to try to start. Let's see here. Okay, we're using the exact same amount of time. You see, I'm just moving this blue shaded area. So let's go to, we're going to go 2003 to 2008. Here we go. So same amount of time. We're just seeing how much the M2 money supply increased back then versus how much it has increased, let's just say, over the last 5 years. And the first number, just to reiterate, was 40%, 38 to be more precise. And here we've got 30. Let me say that again. So 2020 to 2025, we have an increase of 40%, 38%, excuse me. During the same amount of time prior to the GFC, 2008, we were up 30. So a whopping delta of 8%. So again, I'm not saying that 2025 plays out the exact same way as 2028, but I'm saying you can't take it off the table. You cannot take it off the table. And just because we saw all this money printing, quote unquote, prior to this reacceleration, this most recent slight reacceleration of the CPI, it doesn't mean that if we have a recession, it's going to be inflation, if not hyperinflation. It may be the exact same, because if you look at the actual money printing, it's almost identical. We had M2 money supply go up at almost the same rate prior to the GFC as we have seen more recently. And we're taking a 5-year span. It's not like I'm taking a year. So what are our other variables? Well, we had the supply shock. That's the biggie for sure. And then we had velocity increasing with all the stimmy checks. So will we see that in 2025? We might. I mean, who knows? We're going to talk about tariffs here in a moment. But we could see the supply shock. But I don't know that tariffs are going to break down the supply chains like the cerveza or the government's response to the cerveza sickness. That I would put at a very, very low probability. So we'll have to see what happens with the CPI. Is it going to continue to go up? My base case, as most of you guys know, is that we really kind of are just in this range between 2.3 and maybe 3.5. And we're not going to see it really move out of that range until we do get another round of stimmies, until we do get another supply shock, or on the opposite side, until we see a recession, a significant decline in a significant decline in asset prices, increasing demand, purchasing power, aggregate demand, and then all bets are off. And I'm looking at sub 2% on the CPI. And then if we have the stimmies or the supply shock, then all bets are off. And I would see it going north of 3.5%. But we can't just muddle along where we are right now without any massive, huge catalyst that would take it above that range or below that range. And again, there are no certainties, only probabilities. That's just my base case right now. Let's get back to this Wall Street Journal article because they do mention tariffs. Economists say import tariffs that Trump has started to impose could make inflation worse. So here is where I'm going to actually side with Trump. I don't know. I've always said that it will absolutely make the stuff that he's putting a tariff on increase in price, especially if these tariffs are like 25, 50%. If it's a 1% tariff, maybe not. But I don't know that increases the whole basket of goods because you're decreasing economic activity. And at a certain point, unless wages are going up at the same rate for everybody that's shopping at those stores, which is very unlikely, even if you bring manufacturing back, you're going to have a situation where the consumer is just robbing Peter to pay Paul. And so, yes, prices are going up at Walmart, but that's taking a higher percentage of their overall paycheck. So they have less dollars, less purchasing power to go to all those other things. So you see inflation and deflation happening at the same time, right? To where we're at maybe a wash, or we're still in this range where the prices as measured by the CPI, I know that's bogus, but using it as a proxy, are still going up, but we don't have this massive acceleration that we would if the basket of goods and services was measuring just the stuff that was being tariffed. So as an example, let's just say the basket of goods was measuring only the stuff at Walmart, or only the stuff at Target, or only the stuff at Home Depot. Yeah, then you would, and those tariffs would definitely increase the CPI. But we got to look at everything in totality. We can't just look at specific cases. The bigger than expected by the way, what's happening to the dollar, right? If the dollar's going up, that could completely nullify the tariffs. Because if you're that Chinese producer and you've got, let's just say, a 10% tariff on the stuff that you're importing to the United States, well, if the dollar's going up by 10%, 15%, well, you can just drop your prices by 10%. And it all depending on what your expenses are. If most of your expenses are denominated in yuan, then the net result for you is the exact same, because the dollars that you're bringing in buy more yuan, and that allows you to drop your price by that much and still have the exact same profit margins. Now, if you're a Chinese producer and the majority of your inputs are denominated in dollars, then obviously it's a much different equation. Getting back to the Wall Street Journal article here. core prices, which strip out volatile. Always have to use that word volatile. Food and energy prices rose 0.4%. So that takes core to 3.3. But then they get into some of the things within the core, such as egg prices. This is just completely bananas. A dozen eggs right now, $5 in the United. $5. You know what I don't understand is why people don't go out and just buy their own chicken. I mean, I'm serious. I had I've got a good buddy that lives in, he doesn't live on like a farm. He lives in just suburban US. He lives just right outside of Phoenix in a place called Gilbert. And he just has like a normal house, like a normal track house, in a suburb where there's kind of 5 different houses and they're just bam, 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 all put in a row and they're very close together. He's got a little bit of a backyard, but not much. And he had a couple chickens back there. And they were just roaming around and they loved it. I think he might have clipped their wings so they didn't fly over the fence. But they would just run around in the backyard and eat the insects and the scorpions and the bugs. And chickens, by the way, are ferocious predators. I don't think people understand how badass chickens are. I have seen them take down black widows, bark scorpions. I mean, they will just bam, 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 bam. I mean, they're like the honey badger, they're like a bird version of the honey badger. But I know that's getting off topic a little bit. But seriously, you don't need that much space to buy a chicken. And if everybody's eating eggs here, at what point do you sit there and say, okay, I could buy a chicken for $5 and it would just produce limitless eggs. So why the hell am I spending that $5 on a dozen eggs? And by the way, it'll keep the bugs down. Win, 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 right? Wednesday's report was particularly discouraging because housing and rental costs, which have been moderating, are expected to continue to wait a minute here. What are they saying? Wednesday's report was particularly discouraging because housing and rental costs, which have been moderating and are expected to continue to ease, weren't the culprit. Instead, the latest report pointed that inflationary pressure across goods and services that had seen slowdown in prices. Okay, so that's really what's probably got the market freaked out, along with the month over month going up so dramatically. It wasn't really the year over the year. It really wasn't the year over year. Well, this is making a lot of sense, guys. So the next question is what's happening in markets as a result. And we saw the 10-year treasury really zoom up. Let's go to a day chart. It was, whoa. Okay. So it just went parabolic here, up by, call it 13, 14, 15 basis points. And then it's cooled off a little bit here, but we're still at 6.3. Now, remember, we're not close to the high that we saw the other day or a couple months ago. That high was 4.8. So we're still, call it 20 basis points below that 4.8%. And then also remember, I talked about this with Jeff yesterday. Oh, by the way, before I forget, let's go ahead and plug that. Guys, I set up a brand new channel, and we have our first video interview with Jeff Snyder live, and it's called Rebel Capitalist Interviews. Josh, I don't know if you have the link. It probably isn't even in the YouTube algorithm yet, so it takes you some time to find it. But let me just go ahead and do this really quick here, because this was a great interview. You guys are going to want to watch this one. So we go to YouTube Studio, because this pertains to a lot of what we are talking about right now. So I'm going to go ahead and do this. Copy. Okay, guys, I'm going to put this in the chat for you. And Josh, if you can do me a favor and make sure this is in the description of the video. I'm getting sidetracked here a little bit. So there you go. Just put that up in the live chat for you guys. You can follow that link to subscribe and check out the interview. I just interviewed Brent Johnson today, so that should be up tomorrow. This is a channel you're definitely going to want to subscribe to. But anyway, getting back to what we were saying here with the CPI and the 10-year treasury yield is we have to remember that the 10-year treasury yield is the bond market for the world, because the dollar is a reserve currency and we have the euro dollar system, the dollar monetary system that we talk about all the time. So, we could see that long end come down or go up as a result of what's happening outside of the United States. It's not just about what's happening inside the United States. Very important to remember that. On that note, that helps us transition perfectly into the next story, where I want to talk about what's happening in China. Because, guys, remember, this is the second biggest economy in the world. That's the Chinese economy. And they have not just had an issue with real estate, they have had an outright collapse. Even Bloomberg here is calling it a property crisis. And they're saying it enters a dangerous new phase. And I want to remind everyone that as of maybe 2.5 years ago, the largest asset class in the world was what? Chinese real estate. Chinese real estate, $60 trillion asset class. And that has taken a haircut of 35%. So that's, call it 20 trillion in balance sheet assets that are just poof, gone. Paper wealth, destroyed, flushed straight down the toilet. Think about what that does to the psyche of the consumer. When, by the way, real estate was 70% of the overall Chinese net worth. And that just took a hit of $20 trillion. So I don't know how you have an economy that isn't going into a recession with all those factors lining up. So they're literally in like a GFC type of environment right now in China. But as Bloomberg points out, we haven't seen the light at the end of the tunnel yet. It's continuing to get worse. So risks grow as authorities are forced into a first mainland rescue. An iconic Hong Kong developer, New World's bonds sink. Oh, wow. So I didn't even read this article, guys. I'm reading it for the first time right now. Wow. So now they're looking at a bailout of a Hong Kong developer. Geez, you have to ask yourself what that does to the potential peg there with the dollar and the Hong Kong dollar. I mean, that was... oh my gosh, how can I forget? Josh, who was the really famous guy, super smart guy, that was talking about the Hong Kong peg? This would have been 2019 or so, and he was really pounding the table on it. So he may have been very early. Kyle Bass, sorry about that, Kyle Bass. So he may have been early, but this may come to fruition. That's the first thing I think about whenever I hear Hong Kong real estate developer crash, Hong Kong real estate going down. I think of Hong Kong dollar. How can they keep that peg? Because real estate is such a key component of their economy. All right, let's get into this. After 4 years of standing by as property developers like Evergrande spiraled into default. By the way, we started talking about that right out of the gate, and everyone's sitting there talking about, oh, George, you're fear-mongering. This is just nonsense. This is never going to happen. There you go. Getting back to it, Communist Party officials decided in late January that China Vanke, not sure which one it is, one of the country's last surviving real estate giants. That's not good when you don't have that many. When they're saying one of the country's last surviving, which implies that a lot of them have gone belly up, was for at least now too big to fail. Faced with a collapse in Vanke's bond prices and the company's warning of a record $6.2 billion loss. Jeez. That's going to blow a hole in the balance sheet. Officials from the developer's hometown in Shenzhen stepped in to take operational control. Authorities are working on a proposal to help Vanke plug a funding gap of about $6.8 billion this year. Whew, the unprecedented intervention has triggered a sigh of relief. Yeah, a sigh of relief. I mean, I guess, but it should also, I mean, once you take that deep breath, you've got to ask yourself, okay, what other can of worms is this going to lead to? Like, obviously, this wasn't on the bingo card for a Hong Kong developer to have a $6.8 billion loss. So what is that telling us about the other developers that have survived up until this point? And what does this tell us about the future of the economy? I mean, this is a big deal. This is a really big deal. The unprecedented intervention, yeah, right, triggers a sigh of relief, but I would assume that's going to lead to more questions than the answers we have as of right now. Signs of trouble are popping up everywhere. A brief revival in home sales has fizzled, despite multiple rounds of stimulus. We talk about this all the time, that if you do stimulus after stimulus after stimulus, and if you have to keep doing stimulus, well, what that means by definition is the stimulus doesn't work, right? Because if you do 40 stimuli and you're still at the same place, what are you doing here? But they never, ever, ever, these Keynesians, they never, ever, ever sit down and ask themselves or wonder, maybe the government stimulus actually isn't effective. No, because of course that would have to challenge, that'd be cognitive dissonance. That would challenge your entire worldview. And they don't want to do that, right? The Paul Krugmans of the world. No. You'd have to give back that. We'd have to give back the PhD and the Nobel Prize. So more debt restructuring deals are unraveling. And at least a dozen developers face petitions to liquidate once storied names like Country Garden. Yeah, we've talked about them a lot. The pain is also spreading to Hong Kong and Chinese home buyers as tourists pull back. I mean, this is the domino effect, right? New World Development, a real estate giant controlled by one of the financial hub's richest families, is racing to sell assets and mortgage some of the marquee properties as losses mount. It all points to more risks for Chinese economy already grappling with tepid consumer spending. Yeah, that's an understatement. And on top of this, Donald Trump could come in and kick them when they're down. I mean, this gives Trump a lot of negotiating power with those tariffs. So hopefully he'll use them wisely, because like I've said on this channel a lot, I think tariffs from an economic policy standpoint are on net balance a negative, to say the least, for the United States. But as far as a negotiating tool, well, I think if used properly, they're fantastic. And so far, you got to give kudos to Donald Trump, because he has shown that he can really make waves and really get things done quickly by just using these tariffs as a threat, really, without forcing action from Beijing to revive homebuyer confidence. And how are they going to do that? I mean, just think about this for a moment. We all lived, most of us lived through 2008, 2009. And I'm sure a lot of you were homeowners back then, and you remember how terrifying it was. And that might even be understating it. So think about if we were in 2009, 2008, or excuse me, 2009, 2010, what could the US government have done back then to get the average Joe and Jane to go out there and buy a house? I mean, what could they have done that they didn't do? Right? They dropped rates down to zero. They did QE. They bailed out the banks. They took all these toxic sludge mortgage-backed securities off their balance sheets so they could continue to lend. They bailed out Fannie and Freddie. Then they did the FHA stuff, where I believe you had these options for like 0 down payment or maybe 1%, 2% down payment. I mean, they did pretty much everything they possibly could to juice the housing market outside of the Fed going in there and just buying homes and putting them on their balance sheet. And what did that do? Nada. It didn't do anything. The average Joe and Jane even with all of this government intervention, still thought the market was going to go down. And if you think the market's going to go down, you ain't buying. You're a seller on net, right? As a whole. And so my point here is that obviously China is in a very, very similar situation, maybe even worse than we were. So what can the government possibly do to get that Titanic turned around in the opposite direction? Well, they've already tried a zillion rounds of stimulus. Remember the bazooka? That didn't do anything. So my point is, the only thing they can do is just distort the economy even further. You got to let this thing play out, and it's going to play out whether you like it or not. And that most likely means the second largest economy going down even further. Probably haven't seen the bottom. Now, that doesn't mean that the stock market goes down, because remember, these two are completely separate things, just like in the United States. But as far as the real estate market, as far as the real economy goes, I don't think you've hit a bottom here in China. Yeah, they show the home prices going down. I mean, they've been going down, and pretty soon this gets into the psyche of the average, not the average Joe, but the average Cho. That's what I was doing the whiteboard videos. So it's not the average Joe, it's his Chinese cousin. Aha, you get it? The average Cho. But the average Cho is over there looking at this, and he has recency bias. So he's like, hell no, I'm not buying a property. Properties just go down in price. Everybody knows that, because this is exactly what has happened over the last 3 or 4 years. Then they talk about Beijing's solution to the crisis, quote unquote, which we know won't work, because it's just doing the exact same thing over and over and over again and somehow expecting different results. The definition of insanity. They just keep going through here and talking about different things that they could do to stop the bleeding. And at the end of the day, guys, sorry, you're just going to have to take the medicine. I mean, that's the way it works. There is no free lunch here. And when you overbuild like this just to juice the economy artificially, at a certain point, the free market takes over and rubber meets the road. Josh, now let's get over into what is happening with DOGE, and some positive stuff for sure. I mean, they are uncovering. We all knew this was happening. I mean, just using good old-fashioned common sense. When a politician or a government employee takes the job that's paying, let's just say, 250 grand a year, and somehow, and their net worth, let's say, is $500,000. And then somehow within 3, 4, 5 years, their net worth explodes to 25 million. What's going on? I mean, if I asked any of you rebel capitalists out there, even prior to DOGE, what was going on, you'd be like, it's shady. It's shady business. They're taking bribes under the table. I mean, this is third world country stuff, and we know damn well that they do it in Argentina, or they were doing it heavily in Argentina, doing it in Colombia, doing it in China, doing it everywhere, but they're doing it in the United States. Absolutely. Who are we trying to kid? These politicians are as crooked as a scenic railway. Nancy Pelosi, you don't think she's insider trading? I mean, come on, who are you trying to kid? You think these people have some sort of moral or ethical North Star? Absolutely not. The only reason they're taking the job is because they know that this gives them a lot of juice. And they know that now, in order to get this license or whatever it is, you got to go through them. And, oh, yeah, you're going to go ahead and donate $5 million to my charity. And then it goes around, and they just launder the money. I mean, these government officials and politicians are better at laundering money than I would argue the Mexican cartel is. They probably actually go out for dinner and just trade notes. But what's happening here, what's great, is DOGE is actually shining a light on this, shining a light on what we knew was happening behind the scenes the whole time. And I think that is an absolute positive. I would like them to focus more on, reducing the regulations and the bureaucracy and the red tape. I think that's what's going to help out the economy the most, and that's what's going to allow them to bring manufacturing back if they get everything else right. But just looking at this in isolation, to me, this is fantastic. This is absolutely fantastic. They're shedding a light on these crooks. I mean, that's exactly what they are. It reminds me of that story I always used to tell about my father. My father was very old, and he had seen all these presidents in his lifetime. And this is before he passed in 2005. And I remember I was sitting down watching television with him, and we never talked about politics. Never, ever, ever, ever. And he just happened to be watching a show on past presidents in the United States. And it was on the History Channel or something like that. I thought, Dad has been alive a long time. He has seen a lot of presidents. So I said, Dad, who is your favorite president? And he looked at me and he said, none of them. I said, come on, Dad. There's got to be someone that you actually kind of liked that would be your favorite. And I mean, I'm like, Dad, you've seen you lived through, oh my gosh, you lived through Roosevelt, FDR, you lived through Reagan, you lived through, all these other guys that were supposed to be fantastic. And he's like, nope, not, I didn't like one. I'm like, why not? And he just looks at me. He says, because they're all crooks. That was it. That was the only conversation on politics I ever had with my father. And the more time that goes by, the more I realize that wasn't just a joke. It was actually very profound. And we see that playing out with DOGE today. So, okay, let's go over to exactly what's happening. That's why he just looks at me. He says, Georgie boy, because they're all crooks. I remember that like it was yesterday. Okay, DOGE investigates feds whose net worth has exploded after Samantha Power bombshell. So this is a gal that was, I think, the former head of USAID or USAID. So she took the gig at $250,000, and would you look at that? A couple years later, her net worth is $30 million. How is this possible? Is it, she had a book deal? Look, a book deal ain't paying you $30 million. And by the way, you're paying taxes on this as far as the income, right? So if she's making 250 grand, she's paying taxes, she's paying expenses. It's not like she's taking 250 grand a year and dumping it into the stock market or some sort of call options and that she just got lucky and it's 30 million. No. Think about it. She's probably living in DC. So this 250 grand, once she's paying taxes and all of her expenses, at the end of the year, she may be saving 50 grand. So you've got 50 grand a year to go ahead and invest. And in 5 years, you've turned that into 30 million. Yeah, I don't think so. So Musk is, I guess this is the gal right here. So Mario Nawfal is tweeting about it. Musk, I believe, was tweeting about it. According to various reports, and this goes back to this gal, Power's source of incomes have varied. Okay, we talked about that. If we had to venture a guess, DOGE's access to information from Treasury, USAID, and the Office of Personal Management run through Palantir's intelligence apparatus will quickly unravel graft hidden through multiple layers of organizational fog. Absolutely. And I had the conversation with Brent Johnson today, and he was talking about how the United States is going to no longer be altruistic. And I said, well, Brent, I don't know if the United States was ever altruistic. I think that was just a ruse to milk the taxpayer. And that's all these things set up under the guise of altruism were really just they're really just a grift. Quite frankly, they were just a grift for all these people like powers to sit there and do effectively nothing and just get bribes. And as Ayn Rand said, graft, use that political pull to just increase your net worth at the expense of the taxpayer. And this is what's disgusting about it. And they're doing this while at the same time trying to claim the moral high ground. Oh, we're doing good. We're doing good for the world. We're saving the world. We're doing this and this. Me and Klaus are out there really making a difference. And then, oh yeah, by the way, that $5 million kickback that you owe me, yeah, chop, chop, chop. Let's make it quick. This is what's happening. And they've been doing it for decades. And everyone on the inside knows it. And it's almost like a running joke. And this is probably one of the reasons why it was so hard to drain the swamp. Because you have all of these people that are basically grifting off the taxpayer and the government. And if you take that away in the name of ethics or principles or morals or whatever, you take away the gravy train. And then what are they going to do? What is this gal going to do in the real world? Ask yourself that. How many goods and services do you think this gal, what do you think her productivity? If she was paid exclusively on her productivity, what do you think she'd be paid? Answer, a hell of a lot less than 30 million. She'd probably be making 75 grand a year. She'd probably be driving Uber. Who knows? But you get my point, is that these people are highly incentivized to keep the grift going. They have no morals. They have no principles, or they wouldn't be in this position to begin with. Because you think that someone that is running this operation, this USAID, doesn't know what's happening? Of course they do. They're an insider. That's the reason they take the position in the first place, and that's the reason why they're hired. Because the people doing the hiring knows that they're not going to spill the beans. So the fact that Democrats and Republicans are seeing this, I think, is absolutely fantastic. I love it. I love it. I mean, even if you don't reduce, a lot of the grift, the fact that people now know about it and you're shining a light on it, this to me is the greatest disinfectant. And even if this is all DOGE does, I think it really has moved the needle in the narrative for the average Joe and Jane. And they're going to be pissed. I think even Democrats are pissed off about this. Now let's get over into some more good news right here. And I wasn't even going to talk about this, but I just saw it when I was pulling up that other article from Zero Hedge. Putin invites Trump to visit Moscow in highly productive call. And I also saw that Zelensky went to the table and offered some sort of quote unquote solution or some sort of path to end the war. Now, I don't think that Russia is going to take it. It might have been completely ridiculous, but the bottom line is obviously this is something that was not happening when Biden was in office. Biden was sitting there stoking the fire, right? Him with NATO and all these global elites and all the people from the World Economic Forum that want to see World War III because they want to reduce the population by 50% because they're all Malthusians. They're sitting there, stoking the fire. Yeah, World War III, World War III, World War III. And now all of a sudden, and Biden didn't know the difference. He's just obviously a puppet, just a pawn. And he's just doing whatever people whisper in his ear. It's like Weekend at Bernie's. But now Trump is coming in and completely, we're doing a 180 here. And I don't really like what he's doing in the Middle East. But if we're just looking at this on its own, I think this is another thing that's fantastic. That if we can get peace in Russia, Ukraine, this is great news, I think, for the entire world, not just for these unfortunate young people that otherwise would probably be buddies out there killing each other on the battlefield. And that's who ends up paying the huge price here. It's just a catastrophic loss of life. For what? For what? And even if this ends, right, is it really a win for Russia? Maybe. Is it really a win for Ukraine? I don't know. I mean, I guess you could say that Russia puts their foot down with NATO, but I think that might have happened regardless with Trump in office. Now, they couldn't have predicted that, of course. But let's get to the article here. Just on the heels of a historic Putin call, President Trump has revealed an outline of his call with Zelensky, calling it a meaningful conversation. He had earlier vowed to inform Zelensky of the contents of the Putin phone call. And another thing that happened with the guy, I can't recall, his Hegseth or something like that. You know, he came out and said, yeah, as far as Ukraine getting in NATO, that ain't going to happen. As far as the borders going back to where they were in 2014, that ain't going to happen. So he, along with Trump, is taking a completely 180 approach from the Biden administration. And I think this is good news. Absolutely good news. Think about the grift that was going on. And we're talking about the grift within the United States. Think about the grift within Ukraine. I mean, out of the hundreds of billions of dollars they received, how many of those dollars do you think actually went to buy tanks or bullets or missiles or whatever it is? Who knows at the end of the day? But my guess would be not 100%. And another thing that Hegseth guy, I'm probably mispronouncing his name, said is that, look, from now on, if you guys want to fight this war, it's going to be on you, Europe. You're going to have to fund it 100% yourself. This is great. Let's get the United States out of this stuff. It's not ours to sit there and try to micromanage. Trump has pledged that talks to end the war will start immediately. Trump said on Truth Social, both leaders had extended invitations of visiting each other's nation. You never, I mean, what he puts on Truth Social, you never know if that's true or if he's just kind of lying to, position a negotiating tactic. Yeah, who knows with Trump? But taking him at his word, obviously that's good news. He said, I just had a lengthy and highly productive call with Putin. We discussed Ukraine, Middle East, energy, artificial intelligence, and power of the dollar, various other subjects. We both reflected on great history of our nations and the fact we fought so successfully together in World War II, remembering Russia lost tens of millions of people. Yep. That's what war does. I mean, it's just, at the end of the day, there's usually, it's almost like a lawsuit where the only person that wins are the lawyers. The two sides it's just who loses less. That's the winner. So Trump says they talked about strengths between the two. I saw that Tulsi was confirmed today as well. More good news. If you're someone that likes peace and not just everlasting wars. No more lives should be lost. Exactly. Bravo. What is this chart? So, what? Ukraine dollar. Oh, the Ukraine dollar. Ukraine dollar bonds are rallying on the news of the call. Yeah, I would say so. I didn't even know they had dollar bonds. Boy, that might have been a really interesting investment. Well, you learn something new every day. All right, guys, I would like to remind everyone to go check out that new channel, Rebel Capitalist Interviews. We're going to have, who do we have coming up here? Obviously, Jeff Snyder today. Brent Johnson will be posted tomorrow. We're going to interview Patrick Ceresna on Friday. Next week, we're interviewing Gerald Salente. We're interviewing Greg Manarino. I believe Lynette Zhang is in there next week, and we're just going to keep this ball rolling. It's going to be a lot of fun getting back to the interviews. Everyone loves them, and go check those out. These interviews are not something that you're going to want to miss. And on that bombshell, guys, enjoy the rest of your afternoon. As always, make sure you are standing up for freedom, liberty, free market capitalism. I'll see you in the next video.